here too. Make sure I'm sharing my screen. All right, there we go. So, Sunday nights, normally not many people are on. I try to keep these pretty quick. Number one, because basically everything that I'm talking about tonight, we're probably going to talk about early tomorrow morning. But I like to just do like a quick little hop in, see how futures are doing, and just kind of give a little idea of what I'm going to do next week, and the situation on where I think things are going to be. Also, too, on top of that, a lot of people also rewatch these live streams later on in the day, so or later on in the night. So I want to go through and make sure that we're going to cover some stuff. So past 3 months, we'll say like first 3 months of the year were really good. Slow, very, very slow. But at the end of the day, not too bad. And then the past couple of weeks have been, slow as well. I was down at one point like 3,600 for the month. And then towards the end of the week, I had a lot of good runners. I did really well. Completely recovered nearly at one point, and then I think I'm still down on a couple of positions I have, like Carvana, I'm down. I ended up having to purchase Snapchat because of the puts that I sold. If you guys are new and you don't know what selling puts is, I highly recommend going to the announcement section and watching one of the videos I posted like 3 videos ago. It says selling covered calls and puts. Live stream I did teaching people how to sell puts. It's literally, in my personal opinion, the best way to make money trading. It's like 80 to 90% chance of making money each and every week. The only downside is it's not a ton of cash. But at the end of the day, we're here for consistency, not insane wins, because that also results in insane losses. Taking a look, I got Dogecoin set up here. Taking a look at Dogecoin. I don't know if you guys saw Saturday Night Live. Awkward. I love Elon, but he's awkward. But Dogecoin took a pretty massive fade down to 42 cents. Trying to take a bounce, but it's all good. Dow Industrial Average. So the Dow just hit all-time highs in futures. So the Dow minis just hit all-time highs, opening at all-time highs, up a very minuscule amount. I would not be surprised to see the Dow take a pullback going into like the next month, so like going into the rest of May. I wouldn't be surprised if we had a decently significant pullback on the Dow, but overall consistent moves up, up, and up. So the Dow did really good, had a really good week too. If you take a look at the S&P 500, all-time highs. Once again, S&P minis hitting all-time highs today. We'll see how that ends tomorrow, but following the same trajectory as the Dow Industrial Average. And then if we take a look at the NASDAQ, there we go. Make sure it's right. Now we look at the NASDAQ actually setting up really well. We have this good cup and handle, good bull flag setting up here. I want to see the NASDAQ break up over 13,800. You can see that, let me actually zoom in on the 1 hour. You can see we tapped that 13,800 resistance level 1, 2, 3, 4, 5 hours in a row before giving it up. It's looking like tonight and going into tomorrow, we should see the NASDAQ try to approach that 200-day SMA on the hour. And we should see the NASDAQ probably push 0.25% tonight and see if we can break out up through that resistance. Whoa, that's not what I want. Why did I? Okay, there we go. Taking a look at my positions first. I have so many things on here. I don't even know what the hell I'm really in right now. So far, the positions I'm in, I have Snapchat. So I have officially bought because I sold some Snap and then I got stuck purchasing it. But I ended up keeping like $375 or $400 nearly in profits. So I was able to keep those profits, which is amazing. However, now I was forced to buy Snapchat at 58 bucks. So I actually kept my profit, which is not shabby. And at this point right now, I'm down $1,380 on Snapchat. Let's go check out Snap right here. So this is my average. Let me remove that. My average is right up here at 58. Like I said before, if you guys don't understand selling puts, it is, I would say, like an advanced trading strategy, but it's really not hard to understand once you understand options in the options chain. But essentially, when I sold the position, let me see if I can look up what my actual profit from my play was. Snap update. No. Did I take a screenshot of my... I think I took a screenshot of the position. I think it was like $84 in premium. It was $84 in premium, and I had 4 of them. So like 84 times 4. I think I made, yeah, like 336 is the profit I made on the premium. However, I'm forced to buy them. I was forced to buy at 58. So if you do the math, currently I'm down $1,380 on the shares, but I made $336 on the premium. So net, I'm still down about $1,000 on Snapchat. However, taking a look at Snapchat, looking at the weekly, which I entered this position in hopes of holding this for the next couple of months. We have a really good bull flag on the weekly. We have bounced multiple times at this Fibonacci retracement right here, right at this 38.2% of Fibonacci level. We have bounced multiple times. Good reverse head and shoulders forming here. I do think that we will see Snapchat at least back up to 60 by the middle of May, towards the 3rd week of May, probably on the 21st. And then from there, I do think we're going to break out. So overall, I'm not worried about this position. I do have a lot of money in it, but I'm not worried about it. We also have Carvana, which sold off nasty going into the end of the day yesterday or Friday. So currently with Carvana, I think I'm down about 400. Down $401. Carvana, same type of situation, massive bull flag, really good earnings, but the stock did not react in that fashion. But really good earnings, should be bouncing off this 200-day SMA right around 241, and then we should continue to see this move back up. So it's one of those plays that like I'm not worried about, but it is going to tie up a good amount of my capital, which does kind of suck, but it's still not that big of a deal. Apple, I'm currently in Apple, good cup and handle with an insane amount of flow. We had a lot of people, a lot of big money buying the living crap out of this thing over the past couple of weeks and months. So at the end of the day, I'm excited about this play. I might sell it if I hit even. I'm only down $75, but I might sell it if I hit even, just to de-risk a little bit on my positions. But we'll see how things go. Overall, I do think by the end of May, early June, we will see Apple back up at 138 and then back up at 140. Taking a look at AMD, we had this break of pattern right here, which is not a good indication of a strong reversal, but we had this break of pattern. However, we came back up, touched $80 nearly, rejected, which is not a good sign. But what I need to see is this pop back up over $80, hold $80, and then we should see a move back up to $83.23. If it's unable to do that, I will sell and take a loss. Right now, I'm down about 1,200. Taking a look at Baidu. Baidu squeezed on the TTM, rejected, released, about to tap 200-day SMA. I'm looking for this bounce here. If it doesn't bounce, if it breaks the 200, if it pulls down to $180, $177, I will be cutting the loss. This is the least in love position that I have right now. I'm really not too ecstatic on Baidu, but I'm going to give it the time that it needs. A lot of the flows that I was following and the time frame that I'm trading off of have to do with like the next 2 or 3 months. So I'm trying to give it adequate time to move. The other is CCL. So CCL, you can see we have this big bullish pendant. We have a massive TTM squeeze. We had a false breakout here in which we rejected. We had a false breakdown here in which we took a big push up. And I do think that within the next 4 to 6 weeks, we should see CCL back up around $30 to potentially $32. So I do feel good about that. And then the final position I have right now is Disney. Disney has been squeezing for so long. This bull flag has been setting up for nearly 60 days. And we do have earnings coming up. I think they're going to kill earnings. This is the last earnings position that I have, and I feel really, really good about it. Some other notables before we hop off is going to be Citibank. A lot of people in the group hit this last week. I would say that I would be taking profits here. I don't think this is a good time to enter this position, but I'd be taking profits between now and $76. Taking a look at Activision, great entry here, looking like it's about to break out. Price targets are right around $99 and then up to $104. Taking a look at Facebook, good bull flag here. I was in this position. If Facebook pulls back down to 315, I will be entering, but I don't think that's going to happen. It's looking like we're probably going to take this move back up to 332. Taking a look at JCI, ton of calls came in, big flow hit this on Friday. I just think it's too late to enter this position. In order for me to enter, I'd need it to pull back to 63.50. So that's what I'd be watching. Jumia, massive flow hit this last week. A lot of big money players are hitting Jumia. I am not going to touch it, but they are hitting this, and they're hitting it heavy, and I'd expect a massive rip on earnings, but I am not going to touch it. It's just too risky for me at this point. Smile Direct Club, I purchased this off of that massive fade. I am down. This is not really a trade though. I'm planning to hold this for at least 3 to 6 months to see if we can recover back up into that 1050, 1150 range. Skills a little late. We already talked about Snapchat. SPGI, this is another one that got a ton of hits. That came out on Friday. Big money bought the living crap out of this. I am not touching this though. Yo, Angel, what's up, brother? I'm not touching SPGI though. I'm gonna wait until it pulls back down to 385. If it does hit 385 and I have cash available, I will hit it. If that doesn't happen, I will not touch it. My goal for the next 3 months is really to focus on for me on getting the best possible entries that I can get. You're never going to have the best possible entry, but at the very least, even if I don't pick the perfect entries and have sniper like entries, my goal is to at least predetermine the prices like I used to, and then set limits, and that's what I'm going to get in. Because very recently, it's been helping me make a lot more money, just not giving a fuck like what the price of a stock is, just as soon as I see value, taking the position. But at the end of the day too, sometimes I over lever myself, and especially if you're starting out, you need to focus more on getting the best possible positions, because you make your money when you enter. SWBI, tap resistance, we played this last week. I sold too soon, nothing new here. I should have re-entered at 1850, didn't even notice it pulled back. But SWBI broke right through resistance, moving up to $20.25. If we break 20.25, then we're going to move up to 21.50. Should be good too. Twitter bouncing off the 200. This could be enticing this week, but I'm not going to touch it. Uber bouncing off the 200 SMA. Very, very, very enticing. If I had money, which I don't have any cash sitting around at all. If I had cash sitting around, I'd be buying the living shit out of Uber. I really would. I really, really like this setup. XOM broke out already. Big money buying it. I'm not touching it. I wouldn't be surprised if it continued to run, but I'm just not touching it right now. NOW, what's your thoughts? I like NOW. I sold it so I could enter Carvana, and of course, when I sold it, it ripped. Not looking bad though. I probably would have taken profits when it hit that 498, 495 range on Friday, and it rejected, but I do think it's going to get back up to like $500. Randy, and I would be looking to exit the position probably right around 496 to like 500, unless you want to hold and you want to risk it for the biscuit and see if it'll break through 500 and get back up. But I don't really see it getting up above 510 in the short term. Now if you want to hold it for a couple of months, we do have this big gap to fill to the upside, and I'd have to watch to see how the flow is coming in, but we definitely could fill this gap to the upside on NOW for sure. That's really about it. Yeah, big focus for me going into the week and going into the next couple of weeks, especially with me going away next weekend, is to focus on the best possible entries I can get. You have to remember, like, I'm not, like, you're not, me, you, nobody. We're never going to get perfect entries all the time. And if you try to play the game of perfection, you will not get anywhere. That's just life, right? It's like the people who plan for the best and never take action never get anywhere. So it's just like walking the line of just taking action and taking trades, but also picking out the best possible positions. Like for instance, let's look at AMD was a good example. Like I started buying AMD heavy up at 87 and 86 instead of saying, okay, well, we could break the 200 and I'll start buying heavy at 80, which I didn't do. I should have done that. And so I'm really going to focus that going in the next couple of weeks. But at the end of the day, I'm not really worried about any positions that I have, and just kind of see how things end up going. Anything you guys want me to look at? We'll see. We shall see. But yeah, let me know. I will be going away next Saturday, or next Sunday. So I don't know if I'm going to be able to do this Sunday night stream because I think I'm going to be on the road. But I will be doing Monday and all next week in total. Looking really good. What are your thoughts on pins? So I really like pins. Like I briefly touched on it and said I wasn't going to touch it right now. One of the main reasons I'm not touching it at this moment is I just don't have cash. But between pins and between Uber, they both significantly fell off of earnings. I don't think pins had bad earnings. I really don't. I think pins had great earnings. Twitter fell off on earnings, and then Snapchat kind of fell with all social media, but Twitter had ass earnings. Their earnings were terrible. So that to me had a significant reason to take a fade. Pins, I didn't feel like Pins really had bad earnings. So for me, I would be buying this Pins dip personally, especially if I had some money for shares. I don't have any cash, but if I was dip buying anything right now, I would be dip buying Pinterest, and I'd be dip buying Uber, and I would be dip buying AMD potentially. But I think that there's massive upside for the potential risk. We do have a gap we could fill down to 47, but to me, like, to enter here at Pinterest at 59, set a stop loss at 56, and then your potential profits up here between 72 and 76, like, I would take that in a second. Yeah, I would. I just don't have any cash sitting around. I really like Uber though. To me, Uber, if I had to pick two, I like Uber better. But I really like Pins too. I like them both. How is your Robinhood account doing for selling puts? So, yeah, let me check. So I was doing pretty damn good. I had about 20, I started with 24,000 like 2 weeks ago. No, I'll tell you. So I started with selling puts, April 16th. That's like when I put my original money from the market. I mean, from the house that I sold. I put like my initial investment and then put the profits in a different account. But that account, like, I started with like $23,500, and within 14 days, I had an 11% return. So within 14 days, I brought the account from $23,500 to about $27,000. So that was a 12% return from April 16th to May 13th. So you do the math, that's pretty fucking crazy. However, I was playing a ton of garbage puts that I was selling. Like, I was selling heavy puts on Pinterest. I was selling heavy puts on Oxy. I was selling heavy puts on Neo. I was selling heavy puts on Snapchat. And so what ended up happening was I got by the skin of my teeth by a lot of those positions. And then from May 3rd to May 6th, so last week, from May 3rd to May 6th, I fucking lost $2,000 on Snapchat. So I went from 26,700 to 24,484. So like at one point I was down $3,000 on Snapchat, and I'm also down $400 on this account with Carvana. This account was supposed to be only for selling puts, but I bought Carvana shares on it. But yeah, so since I started, it's up 4% in a month. Well, 4% in like 3.5 weeks. So from April 15th to today, the account's up 4%, $975. So not quite my goal. However, I was a little lofty originally. I shouldn't have pushed that hard. What I should have done was, number one, looking for better entries and not selling puts just to fucking sell puts. That when I remember the day that I sold those snaps, like me and Matt, it was not Friday that just passed, but the Friday before. And Snapchat, like, I remember I had 3 times that my puts were up 70%. So 3 times I could have cashed out like $400 or $500 profits, and I just didn't pull out the profits. and I went from being up 4, 5, 600 multiple times to being down $3,000. But I'm not really worried about it because now I just own the shares, and I think we should see a good push up. However, if Snapchat does hit $58, I will probably close the position and then sell some more puts on Snapchat for like 54. So what I should do is just sell them further out of the money, honestly, and just collect more premium. Less premium, but like more consistent premiums, which is going to be my plan going into the next couple of weeks. But right now I'm just not liquid because the worst case scenario happened and I'm stuck buying the shares. Should I sell Jumia? Randy, it's up to you. I would personally sell it because we have earnings coming up. So what I should say is I would not hold it past May 11th. So like, you know, I would maybe see what happens tomorrow and what happens tomorrow, because this the 10th. I'd see what happens tomorrow, but I wouldn't hold it through earnings personally. I think it's gonna rip, but I just don't like holding through earnings. It's just a gamble. I wouldn't touch it. But yeah, Angel, the account was doing really good. I just got greedy. Classic though, classic. Let's see, AMAT, Applied Materials, Kunj. First of all, what's up, brother? I really like this. Like, I like it a lot. Good squeeze, good TTM coming in, good bull flag forming here. I really like it. Looking really good. Good risk versus reward ratio. Best entry though would have been at 124, but that time has passed us. But we do have earnings coming up on the 19th, so I don't think we're gonna release this squeeze until earnings. So I might actually, I don't have cash, but I would be selling puts, or trading shares. Or if you're going to play the breakout, I would probably just wait for options until earnings, because I think if not, you're just going to kind of be sitting around just waiting. I guess that's it's 8 days, and that'll eat up your theta depending upon how far out you go. I'd probably just give it some time. All right. You guys got anything you want me to look at? Work has been really busy lately. I can't be on my phone like I used to. Looking at moving to do more spreads and selling puts. I know Jeremy kills it with spreads. Yeah, I mean, that's like, honestly, selling, like, if anybody were to say, what should I do? I'd be like, you should sell options. It still requires you to trade. You're gonna get, like, I don't want to harp on this too much, but if you look at like a scale, right? The stock market and portfolio managing is this entire balancing system of, on the right side you have risk and on the left side you have potential returns, right? And it's like every time you try to get higher returns, you make yourself have more and more risk. So like you could have no risk at all really on the right side, but that would require you to have very small returns. And that would be like putting your money in the S&P 500 or putting it in the Vanguard index fund, right? Or you could do the opposite side where like the right side of the scale is all the way down, and that means your risk is fucking insane, but your potential return can be 4, 5, 6, 700% returns a year, or it could be you lose everything. You know what I mean? For me, the best risk versus my potential reward is selling puts, because it is still risky. Yet instead of just long-term investing and making 50, 60, 70%, or, 50% return a year, long-term investing is fucking phenomenal. But instead of making 50% return a year, I could actually make 100, 105, 120, if you really want to go crazy, 150% return year after year, pretty consistently. But it does require you to still trade. It still requires technical analysis. It still requires screen time. It still requires you to trade and be a trader just on a longer time frame. And for me, that's exactly what I want in my investing and in my trading. Selling puts. This is the first week I've lost money. It was the first time this year I've lost money selling puts. And I haven't even lost it because I just own the shares. I own the underlying stock now. But the major issues you have is capital. Now, a good question, which I want to make a video on. I forget who it was. Somebody asked me, but what's better? If I only have 2 or 3 grand, what's better? Selling puts on shitbag companies or doing spreads on big companies? Right? Because if you do a spread on a bigger company, you don't have to have as much money. I personally, this is going to sound a little crazy, I understand. I personally would rather sell puts on shitbag companies but very, very, very far out of the money, right? Because the implications of both are different. If you do spreads on Apple, and Apple for some reason drops 10% in a week, you lose everything. You lose your whole portfolio. If you only have $2,000, you have $2,000 in spreads, you lose it all. You don't even keep a fucking penny of it. You just lose all your money. If you sell puts on something like Fubo, like Matt's not here, and I'm not calling him out, but like Matt took a big risky position on Fubo, and he's stuck. I think his average is $31. And Fubo's nowhere near it, but you know, in his case, he kept the premium, and now he owns a bunch of Fubo at $31, which means, let's say he put $2,000 in there. Instead of being down 100% of his money, he's down 50% of his money. You know what I mean? So for me personally, I would sell puts on crap companies, but not sell puts just to sell puts. That's where I fucked myself this week, was I sold puts just to sell them. I didn't find a good setup. I just was like, I'll just sell puts to sell it. Screw it. You know what I mean? My biggest reason over selling puts and over spreads is just because if you fuck up, you don't lose everything and start from zero. Also, too, doing spreads, you need a lot of volume. So you're very limited to the amount that you have. But it's really up to you. I mean, if you're doing spreads too, like you can do spreads, Angel. It's not a bad idea. But I wouldn't put all your money in one trade. I wouldn't put all your money in an account at once. Just think about it this way. Let's say you can make money 99% of that. Let's say 90% of the time, because that's more realistic. If you can make money 90% of the time, and it takes you $1,000 to make $100 a week, it's pretty damn good. That's great. But on the 10% of the time you're losing the entire position, that doesn't, you know what I mean? Like, that doesn't help. That you're just gonna be back at zero and keep going over and over and over. So let's say you have $2,000. I would never have more than $1,000 out in the market doing spreads at a single time, because worst comes to worst, some crazy shit happens, or not even some crazy shit, just like the market pulls back, so like 4 or 5%, and everything falls with it, kind of like we had back in April. You're not stuck losing your entire portfolio, because the reason is, like, when you sell puts, at least you own the underlying. Even if it's crappy, at least you own the shares. And then when you own the shares, you can also do the wheel strategy. So let's say, you know, you got stuck buying a ton of Palantir. Well, guess what? You can just sell crazy out of the money calls and recoup that money slowly over time, as opposed to, like, you just don't own anything and you have nothing, and now you gotta start all over again. You know what I mean? What I would say to anybody is, if you're selling puts and you don't have a lot of money, what you should be doing is lowering your expenses, making more money on the side, and just dumping more money into the market, because the bigger your portfolio gets, the easier it is to make more and more money. Like, I got a buddy right now. He started with like $5,000, like 3 years ago. I taught him how to sell puts, and he's up to like $120,000. And every week he makes $1,000 to $2,000 just sitting there every Monday, sells puts. That's it. And it's not like his main income, but like he still makes like $4,000 to $8,000 a month just selling contracts on like Apple. How much capital? He started with $5,000, but now he's up to like 125,000. But then again, he has also put money into it. So like, I think of that 125,000, like 60, 75,000, 80,000 of that was like his profits year over year. But he did put more and more money into the portfolio. Because if you really think about it, once your portfolio gets up to $250,000, you, in theory, could make it your full-time living. Because even if you only make 50% return a year of 250 grand, it's $125,000 a year. Like, you could live off that. You pay 30% to taxes, so you're really going to make like, you know, $90,000 a year. It's not bad at all. It's just getting to that point. You know what I mean? But I would say selling puts, because the very worst, you own something. All right, squad, I'm going to hop off. I'll see you tomorrow morning. Have a good Mother's Day. Chill with your families. Do what you're going to do. I'll see you early in the morning. Peace.